So on December 10th, the Fed cut rates again.
The third time this year.
The third time. It was a 25 basis point cut, which sets the new federal funds rate target at 3.50% to 3.75%.
So 25 basis points. It sounds small. What's the real-world effect of a nudge like that?
Well, it's significant. In simple terms, it makes borrowing cheaper. Now, that takes time to filter through the whole economy, but it's meant to support investment, support growth.
Right, to get things moving.
Yeah.
But there's always a risk with these cuts. What's the counterbalance?
Inflation. It's
Okay.
always inflation. If you ease too quickly, you risk pouring gasoline on that fire. It's the classic central banking balancing act.
And this is where it gets really interesting because we can see that debate playing out right now, this decision. It wasn't unanimous, was it?
Not at all, and that's a huge signal. There were several dissenting votes.
Which is pretty rare.
It is. The dissenters are basically saying, hold on, the inflation risk is still too high, or maybe the economy doesn't need this extra help right now.
So that internal disagreement is like a big flashing yellow light for what comes next.
Exactly. It suggests the Fed is becoming much more cautious about any future cuts.
Okay, so let's talk about that future path. What does this mean for 2026?
Well, you can see the caution right in their own projections. After 3 cuts this year, many of them are now expecting only one single rate cut for all of next year.
Just one. That's a dramatic slowdown.
It is. They're preparing the market for a long pause.
So the trigger for any future move is just going to be the incoming economic data.
It's all about the data. They'll be zero in on inflation, of course, but also employment and wage growth.
So when's the next time they could actually make a move?
The next FOMC meeting is scheduled for January 27th and 28th, 2026. That's the earliest they could decide to change course or, hold steady.
So the core takeaway for you listening is this. Yes, the rate cut happened, but the real story is the dissent. That's the signal for caution. Everything is now focused on the data we get before that meeting at the end of January.
And this brings up a really important final thought. Since we know this last decision was so split, how stable is that projection of only one more cut?
Meaning it might not even happen.
It might not. What if the economic data in January comes in surprisingly strong? Could those dissenting voices become the majority? That's the real battle to watch for next month.